Hey guys, what's up? Welcome to another episode with me, Shashank Godappa. And in today's episode, I am going to remove all the myths that you might have when it comes to finance. Because a lot of people keep saying that you can become a millionaire very fast or you want to retire by 30. There's a lot of nonsense going around in the finance market. So today, what I'm going to do is I'm going to debunk all these myths and we're going to understand what is true, what is real, and what is actually fake. So one by one, let me tell you 5 different myths about the stock market or about the finance market. Okay, stay tuned. Now, the first thing that a lot of people tell you is having a loan or taking a loan is very bad. Now, let's understand this, right? What is a loan? Basically, if you take a particular type of loan, whether it's an EMI or you're trying to buy, say, an iPhone or something like that, right? If you take no cost EMI, then obviously you get it as like a discount, and basically you take your money and give it in parts for a very long period of time. Now, what happens is you can actually save your existing money and try to gain some kind of compound interest on that and then slowly clear your EMI. So, is having a loan bad? Not necessary, right? But when is having a loan bad is the main question, because we've seen a lot of people and we've seen stories around us where they say कि उसके पास बहुत लोन था और वो बर्बाद हो गया, etc, etc. The problem is when you over leverage yourself. Now, what do I mean by over leverage is when you take a loan which is much more than your haysiyat or auqat, right? And don't do that because it makes a big issue for you. Now, how much is your haysiyat or how much you should ideally optimize for? If you have a salary of 50,000 or if you have a salary of 1 lakh, then your total EMI, worst case, should not be more than 50,000. This is, I'm talking about monthly EMI. That means 50% of your money goes into paying your EMI and the remaining 50% is you. Now, for a salaried employee, it is very difficult to build assets. So the only way to build assets, even I have taken a loan, so not an issue at all. The only way to build assets is to take a loan and build assets, right? I'm talking about assets which are 1 crore, 2 crores or something like that. But if it's a smaller asset, like say an iPhone, then think twice before actually buying it. And if you're buying it, buy it on no cost EMI, but don't over leverage yourself. The minute you go above 50%, you will start seeing the dard, and you will have to start asking other people money, borrow money from other people and start clearing a loan. So having a loan is bad? No, but leveraging yourself, leveraging yourself with loan is definitely bad. Okay, that was point number one. Now, point number two is very interesting, right? And this, a lot of people have actually come and told me that, Shashank, tell me one penny stock to invest and I want to become rich overnight. Now, please understand a logic here, right? Everything has risk and reward. Now, penny stocks obviously are at the highest category of risk and highest category of rewards. But a lot of people ignore the risk and try investing in penny stocks so that they can become ultra rich in the future, right? Now, what happens is most of the time, these penny stocks are driven by operator margin, right? So operators come and pump the stock, it makes it go up. You will invest and you're like, dude, I'm going to become a millionaire. And immediately they dump the stock and it starts coming down. So whenever you look at penny stock, I would say think 20 times before investing, because they are there for a reason, right? People are not stupid, right? You might have think you found the next big Reliance, but if it's a penny stock, I would say think 20 times, read their annual report, go watch some interview of the founder and see if he's legit, because most often than not, this is what is going to happen, and it will be a pump and dump scheme and your money will be lost forever. Now, there are ways to become rich, right? You don't have to keep looking at penny stocks. I know a lot of people want to become rich overnight. You want 1 year mein 100% returns. But if you look at other stocks, maybe mid cap companies or large cap companies, even they compound your wealth every 3 to 4 years, right? Or maybe even 5 years. It is not bad, because if you're going to stay till 60, you can compound your wealth at least 6 times over a period of time. The only way to do that is by compounding interest. Now, there are different ways to save your money through compounding interest, right? One is basically trying to save every month in an SIP format and keep making it go up, or the other option is to do something known as a mini save. Now, this mini save is a new feature that has been launched by IND Money. Let me show you what that is. Now, basically what this mini save feature does is basically it automatically track all your digital spends throughout the day, and it will start rounding off the spare change amount, and then it will deduct it from your account and save it in a virtual pot. Now, once this mini pot will reach 1000 rupees, it will automatically get invested in a US stock of your choice. Now, just to give you guys a perspective of how powerful a compounding interest might be, if you're invested just 100 rupees in Amazon daily for 10 years, and that would have been 26.76 lakhs right now, and that is only from your spare change. Now, it's very easy to set up this mini save. It just takes 3 steps. One, you have to enable your KYC and get your KYC done. Second, you enable expense tracking. So once you enable expense tracking, it'll track all your expenses. And third, you have to set up auto pay, which will automatically deduct your money and start investing in US stocks once it reaches a 1000 rupee limit. Now, apart from that, there's another benefit, right? If you actually sign up on the IND Money account from the description link below and create and fund your US account, then you will get free Apple stocks worth 1000 rupees on your first deposit. Now, obviously, I've been using IND Money for a couple of months and I've been talking about it, and it's a very good experience on that, right? Now, IND also helps you invest in US stocks either by a lump sum or in an SIP mode, again compounding your wealth over a long period of time. And you can basically start weekly compounding with this, with at least I think 500 rupees is what you can start with. So look at the link below, join IND Money and start investing now. Now, the third myth that I keep talking about is people think that they can start day trading and make 100% return in a day. Yeah, you will see all these different influencers, option selling, people make 6% a month, amazing. Option buying, people make 100% a month. But what they don't show you is they also lose 100% a month on a day-to-day basis, right? Now, everyone thinks day trading is very easy. I will start day trading, I will become very rich. And again, as I said, Indians have this thing where they only look at returns and they become blind when it comes to risk reward ratio, right? Now, I've seen a lot of people, when I'm teaching fundamental analysis to them in my community, they always say, Shashank, please teach me technical analysis. I want to know how to make money. That's not how it works. If you're coming into technical analysis only to make money without any knowledge, 99% of the time you will lose money, because it is not a scheme where you can just invest 100 rupees and make 200 rupees out of it, right? First of all, to day trade, you need at least 10 to 15 lakhs in capital. You need to have all the knowledge. You need to be a very shant person. There's a lot of psychology involved in this. So if you want to learn about day trading, I suggest you first understand the Zerodha Varsity. You can learn a lot from it. And there are different websites that actually teach you technical analysis for free, even online, right? So I would suggest start reading about it first. Don't get into that thing that I'm going to make. You will lose money, right? And if you do lose money, put it in the comment section below over a period of 1 month, right? Because don't get looked at all this 100% return, 200% return and get too excited. Don't do that. Now, point number 4 is buying versus renting nonsense, right? Now, everyone's like, dude, Shashank, we should start buying flats or should we start renting flats? Now, there's a thing in our culture, very early on, people say if you get a good salary, you should invest all of that money and start buying a property, right? Now, the problem is, again, your EMI math that I told you a little while ago, that it should not be more than 50%. So if it is more than 50%, then I would suggest don't do this. Again, you should only take a house only when you feel 2 reasons. One, your insurances are covered, means if something happens to you, your insurance cover is there for your family members. And number 2, you should also see that you have enough money into emergency fund and then take a house. Now again, there is another problem here. If I had to take a house in Bombay, I would not recommend. I would rather rent a house. But if I had to actually invest in real estate, I would invest in the upcoming cities right now, which is like Bangalore, which is Pune, which is Hyderabad. These cities are now growing really well and the compounded return on real estate will become more, right? Again, it is a long game. It cannot happen instantly. You will not become instant overnight success. Takes a long time, mehnat lagta hai, and if you do it smart, like all of us are doing, we invest in every different avenue, that is when you will start making a lot of money. Okay, so that is how you invest in real estate. Don't keep looking at buying a house and then going into massive debt. You will be stuck for a long period of time because it is a long-term commitment. Now, finally, this is the most hilarious finance myth I've seen. A lot of people come up to me and say, Shashank, I want to retire by 30 or I want to retire by 40. I'll be like, okay, how much money do you need to retire? 3 crores, 4 crores, 5 crores, I'm happy. Now, let me tell you one thing, right? 3 crores, 4 crores, 5 crores of today. Okay, of today, right? If you have 3-4 crores right now and you have another 30-35 years to live, right? And you're saying I will not make any more money and I will only use this money to slowly compound myself. More often than not, you will remove that money for some car or some expenses or some emergency fund or something, and you will not let it compound as much as possible. Another thing I want to tell you guys is, if you think 3 crores is enough today, maybe yes, but if you ask me what will be the money that you will need at the age of 60 for your family, for your kids, for your marriages, for your education, etc., it will be more than 10 crores. And you need to keep an insurance policy also of 10 crores so that nothing happens to your family. So today 2-3 crores might look very good or very big, but if you calculate with inflation of 6% over 30 years, then do the math. So when you keep saying that, okay, you know what, give me 3 crores, I'll retire right now, it is not possible, because if you have 3 crores in the bank account, you are not going to sit on 10% interest every month. It is nice to put on paper and say, I'll get 10% interest, 30 lakhs in a month, I'll be very happy. 30 lakhs my tax katega, so you will have to leave that also, right? Then you'll have 27 lakhs, 26 lakhs to play around, but then your hands will start itching and you will start using that money, and eventually when a big emergency happens, you don't have that kind of money. So whenever people say that, you know, I need to be FIRE or, you know, independent or financially independent, it takes a long time to be financially independent. What are the things you need to be financially independent? Number 1, emergency fund is required. at least 20%, 20 times your salary should be your emergency fund annual salary ke hisab se. If you talk about insurance policy, you need to have a very good insurance policy. You can take a term insurance policy, you don't have to take anything else. Good health and good term insurance policy, so that your future is sorted, right? Ideally, if you have one or two real estate assets, then you can say, okay, good, because anything happens bad, I can at least sell those real estate assets and pay off my debt. Number three, you should also start having good dividend portfolios, so that over a period of time, when you're 40, when you're 50, then you can tell me, Shashank, but I have so many stocks that are high dividend paying, high dividend yield stocks that are paying me a lot of money, so I'm sorted. That, if that is the case, then I agree to your point that you can retire as well. And finally, you should also have some amount of money in gold, and you should have enough money for big expenses, because you might want to do an international trip, your medical bills might go up over a long period of time. But all these things are very important for you to be financially 360-degree a good person when it comes to finance. Just investing in one company or one stock and think it will go up 100% is the most stupid way, and you will absolutely lose money, a lot of money, right? So don't do these things. Do not think about 30, 40. If someone says that, laugh at him, say, boss, you're an idiot, don't do this. Unless he has baap ka paisa, then it's not a problem, right? So these are the 5 things. So guys, that was the entire video on the 5 myths of finances. I'm just doing this so that a lot of people sometimes get swayed away with this bull run. They see a lot of percentages going up and they start making stupid decisions or rash decisions. So I'm trying to avoid that. So please don't do all of these things. If you have any doubts, you have any questions, you can put in the comment section below and I will answer to all of them. Also, don't forget, you can set up the mini save feature on IND Money, and also the link that is below, you can sign up on it. And if you deposit your first funds into that IND Money account, you get free Apple shares worth 1,000 rupees. So don't miss that out. It's nice. You can take it and have a good time. Okay. This is me, Shashank Godappa, signing off. Take care. See you guys. Bye.